welcome to Hybis TV. B.N. Kalyani, Chairman and Managing Director of Bharat Forge Limited, said that the quarter gone by was impacted by the COVID-19 pandemic and the stringent measures adopted by countries to control the spread. The government imposed economic lockdown coupled with lower underlying demand had an adverse impact on the sales. This has resulted in the company posting a loss of Rs 563 million for the quarter. Despite being operational for only 1 month in the quarter and running at 20% capacity utilization, they were able to reduce break-even levels through continued focus on cost reduction and improved productivity. In these uncertain times and working within guidelines set by local authorities, they continue their steadfast focus on 4 C's: meeting customer demand, ensuring the safety and well-being of their colleagues, control on costs, and working on the cost reduction initiatives already mapped out. Total revenues in Q1 fiscal year 21 at Rs 4,270 million declined by 51.5% as compared to the previous quarter due to the shutdown of manufacturing operations in the month of April and May on account of the lockdown imposed by the government to control the spread of the pandemic. Operating leverage played out with EBITDA for the quarter at Rs 17 million. The company posted a loss at the PBT and PAT level of Rs 716 million and Rs 563 million respectively. The domestic automotive industry was severely impacted by the outbreak of COVID-19 pandemic and the resultant nationwide lockdown imposed by the government. As a result, there was no production of vehicles for a major part of the quarter. Most of the OEMs started operations from mid-May onwards and are gradually scaling up capacity in a phased manner, but activity is still at suboptimal levels on account of supply chain disruptions and intermittent lockdowns. With economic activities coming to a complete standstill, the M and HCV segment was the worst affected, with production down to 92.5% as compared to the same quarter last year, while passenger car production was down 84% for the same period. Sustained and meaningful macroeconomic revival, pickup in infrastructure projects, implementation of scrappage policy and reduction in GST rates remain critical factors for the revival of the industry. The industrial business revenues were also affected due to COVID-19 related shutdowns and weak economic activity. Our key sectors such as O&G and construction and mining witnessed considerable decline in activity and low demand. While customer demand is slowly improving, there is significant uncertainty around the pace of global recovery in the key markets that we cater to.